Good morning, everyone. Mark Soderberg with ADM Investor Services with your morning ag outlook for Tuesday, December the 12th. Mixed trade overnight with some two-sided trade. A little bit of a higher tilt here as we move towards the morning pause. Corn's kind of taking over a little bit of a leadership to the upside, currently up 2 to 3 near session highs. Steady right now, actually turning a tad lower in the beans, a couple better in the wheat. Kansas City's up 5 to 6, a little bit higher in the meal, a little bit lower in the oil. A little bit of a disappointing day yesterday for the market bulls in the feed grains. Funds were sellers of about 7,000 contracts of Chicago wheat, 3,500 contracts in the corn. We've got the spec short position in Chicago wheat back over 100,000 contracts now. Wheat prices pulled back sharply yesterday as there's no additional announced sales to China, with the recent 90+ cent bounce in Chicago wheat and just over 80 cents in Kansas City. U.S. prices have quickly become uncompetitive again in the global marketplace. A bunch of wheat tenders going on today with some results expected likely during the session. Also, Egypt has announced that they have nearly 5 months of wheat on reserve here. We did see some crop conditions yesterday in Kansas. Conditions improved 1% in good to excellent to 39%, much better than where they were a year ago. There was also a 1% decline in poor to very poor, with the fair category increasing by 2%. The soybean complex rallied yesterday on speculative buying, while the market was also adding weather premium as conditions in South America, more specifically Brazil, continue to remain less than ideal. Rains across much of the northern growing regions have been quite scattered here in recent weeks. This week really being more of the same as temperatures heat back up again to much above normal readings. There remains some decent prospects for rain in week 2 of the outlook. However, confidence remains low, as that has been the case for much of the past several weeks. Most private production forecasts are coming in just below the recently revised USDA estimate at 161 million metric tons. U.S. stocks are tight. Global stocks are not. However, this will require record production in South America, something that is just far from certain at this point. Spot January beans did test resistance at its 100-day moving average here overnight before pulling back a touch. Corn just continues to grind sideways with not much of a range here in the big picture. Supplies remain comfortable at over 2.1 billion bushels, but so do exports as well. U.S. corn is priced cheapest below South American supplies now into March, so look for these strong sales to continue. And yesterday, the Argentine government did suspend their grain export register, something that ahead of some expected economic announcements today from their new president, Javier Milei. At the moment, this is not expected to be a long-term shutdown. So pretty quiet to start off with. We'll see if we get any export announcements here at 8 o'clock this morning from the USDA. And we have our routine usage numbers here with ethanol tomorrow, export sales on Thursday, NOPA crush on Friday. Thank you very much for listening. I hope you have a wonderful day.